It is 6:30. I'm going to call the meeting to order. This is a regular meeting of the Fairview Town Council, December 14, 2021. This time, Councilwoman Kenley will have our invocation.
Would you bow your heads, please? Our kind and gracious and loving Heavenly Father, we're so grateful for all the blessings that have been bestowed upon us here and around us in this beautiful community of Fairview where we live. We're grateful for opportunities to be here tonight, to make important decisions. We pray for your presence to be with us as we work together to do the best for our town. Please hear our prayers. Amen.
Stand for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I do have two changes to the agenda. The band booster sponsorship, item number 4. The band boosters want to be here to present, so they will be here in January to present. So Teresa, if you'll move that to the agenda in January. And in its place, I'd like to have item number 4, discuss approved Christmas bonus for staff. Are there any other changes to the agenda? Now I'll entertain a motion to approve the agenda as amended.
So moved.
I second.
All in favor? The motion carries. Move to public comments. Teresa, are there any public comments?
Did anyone sign up? No.
Okay, there are no public comments, so we'll go to the consent agenda. Entertain a motion to approve the consent agenda unless anyone wants to pull something from the consent agenda.
I move that we approve the consent agenda.
We have a motion, is there a second?
Second.
All in favor? And consent agenda is approved. We'll get to items of business. Item number 1, swearing newly elected council members Patricia Kenley and Jerry Slotts. Clerk will swear in the new members, or newly elected members.
Patricia, what would you come first? Raise your right hand. And read it out. I, Patricia Kenley, do solemnly swear that I will support and maintain the Constitution and laws of the United States and the Constitution and laws of North Carolina, not inconsistent therewith, and that I will faithfully discharge the duties of my office as council member for the Fairview Town Council. So help me God. Jerry? Raise your right hand, place your left hand on the Bible.
I, Jerry Slotts, do solemnly swear that I will support and maintain the Constitution and laws of the United States and the Constitution and laws of North Carolina, not inconsistent thereof, and that I will faithfully discharge the duties of my office as council member for the Fairview Town Council. So help me God.
Congratulations to Jerry and Patricia for being duly elected and sworn in. This time we need to elect a mayor pro tem. I'll open the floor for nominations.
I would like to nominate Gary Wilfong to serve as our mayor pro tem.
there a second?
I'll second.
All in favor? The motion carries. And we need to swear in Mayor Pro Tem Will Fong at this time.
We'll go back up there.
Yeah. Raise your right hand.
I, Gary Wolfond, do solemnly swear that I will support and maintain the Constitution and laws of the United States and the Constitution and laws of North Carolina, not inconsistent therewith, and that I will faithfully discharge the duties of my office as Mayor Pro Tem for the Fairview Town Council, so help me God. Thanks, sir.
Okay, we'll move to item number 3, presentation of the 2020-2021 town audit. Danielle Bennett, J.B. Watson and Company. Welcome back.
Thank you very much. Thank you for letting me be here. Thank you for letting us perform your audit. We like having good, clean clients, honest clients, so we thank you. I know all of you have seen me and heard me stand up here and go through this audit before. So I'm going to do, if it's all right with y'all, a very quick roadmap. Nothing has changed. And then there are a few new things I have to discuss with you this year as required by the state. So if you don't mind, do you all have a copy of the audit? You can look at the table of contents or just flip through with me if you want to. At the beginning is our auditor's report. I told you last year when I was here that this was going to be different this year. That was the truth then, but the AICPA, the American Institute of CPAs, deferred some of the auditing standards because of COVID. So we did not implement, it's different, we're not required to implement some new auditing standards and a new audit report. So this looks just like the ones in the past. Next year, there will be a new auditor's report. It goes into a little bit more detail about your responsibilities and our responsibilities, and it's supposed to be more easily understood. So we will see how that goes next year. But this is still worded the same as in the past. This is what we call an unmodified opinion, which means it's a clean opinion. We have audited your financial statements and found them to be materially correct. The section right behind that is management discussion and analysis. This just gives you, your financial statements are just 1 year. So the MD&A provides you 2 years. It gives you, in summary form, a comparison of the current year, the year we just audited, June 30, 21 and June 30, 20, and just gives you a few highlights of that. And this is completed by management with a little bit of help from us. And then if you'll skip all the way through to Exhibit 1, and I'm just going to go through this quickly. If you look at these and you have questions, interrupt me, please. Exhibits 1 and 2 are on what's called the accrual basis, which means any expenses you've incurred, any revenue you've earned are reflected on Exhibit 2. Exhibit 1 reflects all the assets and all the liabilities of the town. So this picks up your buildings, your equipment, your long-term debt. And then Exhibits 3-1 through Exhibit 5 on pages 3 through 7. These are on the budgetary basis. This is more in line with what you get from Darrell each month. These are in summary form, the details at the back, like it's been in the past. The format has not changed. So these are your assets, your liabilities, your revenues, and your expenses in summary form on budget basis. Your notes begin on page 8, and they go through page 18. The first few pages describe your significant accounting policies, and there are no changes in those this year. The detail for your fixed assets or your capital assets are on page 15. The town did not purchase any capital assets this year, and you just had a couple of computers you got rid of.
Can I ask a question about, can you give us a Cliff Notes version of what the modified accrual basis is?
I sure can. Modified accrual basis is what all governments in the state of North Carolina are required to keep their books and records on during the year, and it's your budget basis.
Okay.
So it's basically cash in and cash out. The expenditures or the expenses are the bills you paid, the cash you paid out. The revenues are the cash you have received or any cash that you would have received within 90 days of your end. That 90-day period in North Carolina is what's considered readily available and determinable. So like you know the amount and you know you're going to receive it because you got it within 90 days of your end. So modified accrual would include all your, it's basically cash in and cash out.
Okay, thank you.
It's a little bit more than cash basis, if that makes sense.
It does.
And those exhibits 3-1 through 5 are on that basis, and then exhibit A-1 at the back that's in more detail is on that same basis.
Okay.
And it lines up with the budget that you've adopted during the year. That's how your budget is set up. Back on page 15, those are your capital assets, your land, your buildings, your equipment. If you had purchased anything, that would be in that increases column. As you sell or dispose of assets, that's in your decreases column. And then your depreciation is in this note also. On page 16 and 17 is the detail of your debt that existed as of June 30th. So at that point, you had the one note for the previous purchase of real estate. Page 17 shows you how your debt payments are due in the future. The only new note this year is at the bottom of page 18, and that's for subsequent events. Auditing standards require management and auditors to disclose any events that happen after your year end that would be significant to the readers of the financial statement. So we did disclose your American Rescue Plan Act revenues that you received in August and the fact that you will receive more next August. And then we also disclosed the subsequent purchase of the town office properties. The detailed schedule for your general fund revenues and expenditures on the modified accrual basis is on page 19 and page 20 and 21. It shows you your final amended budget in the first column, your actual amount, and any variance. The detail on your property taxes are on pages 22 and 23. In North Carolina, you keep 10 years open. At the end of 10 years, you no longer consider that a receivable because you no longer consider that money available. You're most likely not going to collect it. So these are the 10 open years on page 22 of your taxes receivable. And then the detail of your 2020 tax levy is on page 23. It shows you your valuation, your tax rate, what you billed for real property, for motor vehicles, and at the bottom you'll see your collection percentage. And then you have a new schedule this year on page 24, because you did receive coronavirus relief funds in 2021. We had to add a grant schedule that shows any federal or state grant expenditures. And then that local column would be if you had a local match. So any grants that you have a local match, that would show up in that column. So I know that's really fast, but I didn't want to waste a lot of your time this evening with things that you already know. If you've got any questions on those, I'll answer that. If not, we'll move along.
Any questions?
Loosely filed in the back of your financial statement should have been 2 letters. These are the same as you've had in the past. The one that starts in planning and performing our audit is what's referred to as an internal control letter. We are required to disclose what are considered material weaknesses or significant deficiencies to the board. And in this letter, it defines a material weakness for you. It's the possibility that there could be a material misstatement and it not be discovered in your financial statement. And then it defines a significant deficiency. As in the past, we have a finding of the lack of segregation of duties. And that's just going to happen in a town your size with the number of staff you have. It's not a demerit against your staff. It's just it's impossible to completely segregate duties, and so we have to report that here. The state expects us to report that. We did not notice any other deficiencies. The next letter is required communication between the audit firm and those charged with governance, which are you. This is not to Ed and Teresa and Bill, this is to the board, to let you know how we conducted our audit, if there are new accounting policies that were adopted this year and there are not, what your major estimates are in your financial statements, and that's your depreciation. If we had any disagreements with management, any difficulties in completing the audit, which we did not, what's included as supplementary information in your financial statements, so all of that is disclosed in this letter, and this is the same as in the past. If there were any consultations with other audit firms, any difficulties or anything like that, we would disclose that in this letter. And we would have also communicated to you before now. If that was the case, this letter would just be a formality. And then tonight I brought two handouts. One is the one we typically bring every year. Because your financial statements are 1 year, I think it tickles you to see two of the years compared. So this is just that simple comparison I do every year in very, very summary form of the last 3 years. And then the gray column is the statewide average. Now, the statewide average is as of June 30, 2020, not June 30, 21, because it's not available yet from the state. This is for towns your size in your population group, which is 2,500 to 9,999. And I just pulled out some key factors for you: your total cash, your general fund expenditures, your fund balance available. And I'll go into the fund balance available a little bit more with the new handout I have for you this year that's required by the state. I also have your collection rate for your property taxes on here the last 3 years and how you compare to the state, your long-term debt, and your federal and state grants if you've had any. I will point out that your fund balance available is very strong. State law requires 8%. Yours is 117.96% of your general fund expenditures. The statewide average for a town your size is just 77.29%. So you've got a strong available fund balance. And then I've attached some information to let you know who's included in your population group, which other towns are you comparing yourself to with these averages. So if you look, like the average statewide cash is 6.7 million, and yours is 393,000. But if you look here in the other municipalities in your group, you're looking at like Kill Devil Hills and areas at the beach, areas at the mountains, areas that have to have cash on hand to deal with hurricanes and other emergencies. So that's why there's a big difference between you and this statewide average, I feel. So I always attach that for you.
Many of these towns have a much higher tax rate too, don't they?
True, they do, a much higher tax rate. Like the average tax rate for a town north side of North Carolina is 35 cents. A lot of these offer water and sewer, and you do not. Well, with water and sewer, you've got to have more cash on hand to deal with the infrastructure costs. So that's the big difference. That's why I give you the detail on that. And then the last handout is totally new this year. In your audit contract that you approved January, February, whenever we did that, the state of North Carolina, the state treasurer's office, amended the audit contracts last year and said we were required to present the audit to the board, which we have always done with you. We are required to present it within 45 days of submitting your audit to the state. If there's significant areas that you need to address, you're required to respond to the state within 60 days of me meeting with you tonight. You don't have to do that. But the local government commission of the state treasurer's office created this Excel spreadsheet this year. They've had it in the past, but they put it upon the auditors now to do this. We entered the information from your audited financial statements into this Excel spreadsheet, and it created these 5 pages that I'm required by North Carolina state law to keep you. These are performance indicators. We are supposed to go over with you any performance indicators that are shaded green. We don't have a color copier, so you don't know what is shaded red. But I will tell you, the only thing shaded red
It was on the very last page, and when we get to that, I'll point it out to you. And it's just the lack of segregation of use. It's not anything of concern for you. So this is a new performance indicator index that I will be required, or your audit firm will be required to discuss with you each year when they present the audit. When I first looked at this, I thought it was just Greek, and I'm like, how am I going to explain this to board members who are not accountants? But I think I can do it. The first thing they want you to know is the state law is the 8% of available fund balance. We've always said LGC wants you to have 25% of that number, which means you could cover 3 months of your cost if some catastrophe happened in North Carolina and you didn't get your property taxes and your local option sales tax, because they've always had that kind of 25% guideline. They've now gone back, and this year they've decided they need to break that percentage down based on your expenditures. So if you'll see in the little box up here, if your expenditures are over 10 million, then that 25% threshold is what they want you to have. But if your expenditures are different, they're kind of quartering it out. So you fall on the line that says $100,999,999, which means the state really wants your fund balance available as a percent of your total expenditure to be 71%. And if you look further down on this page, I think it's hard to read, but this column here, I don't know if y'all can see, this column here is the indicators. Yours is 117.96, which is what on that sheet I give you every year. So you're above the 71%, so they're going to be pleased. If your number were lower than the 71%, then this would be shaded red, and this would be an area of concern that you would have to contact the state and explain to them what you're going to do about it. But you're strong in that area. The next page is for municipalities with water and sewer systems. So we can totally skip that page. It's not applicable. The next page is for municipalities who offer electric service. Here again, you do not offer electricity, so that is NA, so you can skip that page. So we just really have the next few pages to look at. And I'm required to go over this with you, so I will do it quickly. If you have any questions, please just interrupt me. The first one is, was your audit report submitted within 5 months? Which means, did it go to the state by December 1st? And it did. It was submitted by December 1st. If it were not submitted by then the state would think that your financial statements aren't available to the public in a timely manner. But by doing it by December 1st, they think that's a suitable amount of time for you to have financial statements available to the public. So you have a yes in that column that they're really looking at. None of this is red. The next question asks, and this is new, they do not want you, the state, want to make sure that you do not have more than 3% uncollected taxes based on your budget. So they're looking at Exhibit A-1 in the back of your financial statements to see what did you budget for your taxes, what did you collect, and are you strong fiscally based upon what you collected compared to what you budgeted. You actually collected 7% more than you budgeted, so that's good. Did you have a question?
Oh, no.
Okay, that's good, because I tend to just talk and don't pay any attention, I'm sorry. If that were an issue here, it would be highlighted red, and I would have to tell you here again, because we don't have a color printer. The next question asks, did you decrease or has your property tax value decreased from one year to the next? And this says false, which means your values have not decreased. They've actually gone up. The next question is, did you have an effective pre-audit process to ensure budgetary compliance? This means when a bill comes in, do you compare it to the budget and make sure you've budgeted it? and you don't have items over budget at the end of the year. And so the answer to that is yes. The next question does not apply to you at all, it's not applicable. The next one is also not applicable. The bottom question is, did the unit have any statutory violations listed in the audit report? These would be things like if you didn't have your ethics training, if you had items over budget, if you had a deficit fund balance, if you had violated some general statute applicable to budget and fiscal control, you do not have any of those. So that is good. It's hard to tell from this report if a yes or a no or a false or a true is good. So all of these reports are fine. The first question on the last page is, did the unit have problems with debt service payments being late, or did you violate any bond covenants? Here again, you made your payments on time. You did not violate any bond covenants. The next question relates to a municipality that has a landfill, so this does not apply to you. And we finally get to the one that's red. It is gray on your box. The little light gray box is actually red if you were looking at the Excel spreadsheet that LGC has. This is, did the unit have any significant findings or material weaknesses? And that is that lack of segregation of duties that's noted in the internal control letter. I have communicated with LGC. If that is the only finding in your audit, you do not have to give them a formal response to our presentation of this report to you. If you had other findings, there is now a portal at the local government commission's website, and you would have to, Daryl or somebody would have to go to the LGC portal and submit a formal response to LGC about how you're going to address the audit findings. In the past, this is what they call a white letter. I don't know if y'all ever got one. I hope you did. You've not gotten one since I've known you. LGC would send you a white letter if there was something they noted in the audit that they felt like you needed to address. And the board would have to write a response and then a letter back to the state. We are now in the technology age, and so there's a portal. And this would all be done that way if that were the case. Your only thing is the lack of segregation of duties. You do not have to have a response. The next thing does not apply to you is if you sell electricity. And then the last thing is, were there any significant findings that we noticed as the audit firm that would affect the fiscal health of the town that we felt we needed to share with you? These would typically be things in the management letter, and there were none this year. So that's a lot to say to cover a 5-page report that the state wants you to have. But these are financial performance indicators that the state feels you as a board need to be aware of, need to know if your town is meeting these indicators properly, and if there are issues that you would have a formal process to respond to the state about.
I do have a question now.
Yeah.
At what point do we, based upon what you're telling us, do we go to the next level to where we should have segregated process? I mean, is that based on populations? What is that based on?
It tends to be more driven by your staff. If you look at a town, say maybe like Indian Trail, where you've got a finance department and this person enters your bills and this person approves the bills and this person cuts the checks, and then the board member comes in and signs it. The whole point of segregation of duties is that whoever initiates a transaction does not see it all the way through. And so you have some of that, like Teresa and Ed typically would initiate something that would cause an invoice to happen, but then Daryl processes the invoice, Daryl does the bank reconciliation, Daryl maintains the books for you, which is what's efficient and cost effective for a town your size. So about the only way to get rid of that finding is if you had a huge staff. And that's not cost feasible for Fairview at this point.
It seems like that would be something that would be, based upon your explanation, that we should have to go through this every year until we increase the size of the town, we have to increase the size of the staff.
Right, so you're always gonna have this in your internal
Okay.
control letter if you have a reputable audit firm. LGC expects it. If we did not have this finding in this letter, I don't think LGC would approve our audit. They would want to know how on earth you got around that. And there are ways, I mean, if in some small towns, you'll see it where one person, it might be, say, Teresa paid the bill, but there's actually a board member that does the bank rec. And then there's an outside firm, a CPA firm that keeps your books for you. So I do have a small library authority that there are two people in the office, but they don't have a separate, like a segregation of duties because they do contract out the accounting and things like that. There are ways around it. I don't know that I see a feasible way around it for Fairview right now.
It sounds like to get around it, we'd either have to hire more people or contract out some of the financial pieces of what we're doing.
And LGC knows that. They work with lots of smaller municipalities. And so we have to report it as a finding, but they know that there's not an efficient way for you to work around that right now. And so you set up checks and balances at that point by having board members look at bank recs and having board members sign checks and things like that. So you're not negligent. If you just let Daryl do everything, you would be negligent, and I would be upset with you. But you have implemented controls, and you are always to be on guard and mindful of that if you think of other ways to help with that, to make sure that you're taking away as much risk as possible from misstatement of your books.
Any questions or comments? Danielle?
I just had one person that did that audit before said if he couldn't find something wrong, he wasn't doing his job right.
Yeah.
So you gotta do it, you do it thoroughly, you will find something in there.
I don't like to have findings. I can't stand to have them. I will make sure what we've documented is correct before I write you up. But if you've got something, I'm going to write you up because that's what that's what your taxpayers are paying the audit firm to do. So
And we did have adjusting entries. We had probably only 5 or 6, something like that. So, I mean, they do find things that we need to adjust for. But,
Yeah.
Yeah. So, I mean, that.
And a lot of those too are like the receivables and the payables at year end. And so Daryl gets the information together and gives it to us, and then we propose the entry for him to post, and then we find posting errors. I mean, that's just, we're all human.
Well, we appreciate the fact that you're doing this and that I don't have to send letters to the state explaining why it's late again, because we did previously.
I'm concerned about my client that you have to go to the portal and do this new response. I'm like, why can't we just do the white letter? Like we've already done? But we will move on to the technology age.
Okay, thank you very much.
Thank you all. Merry Christmas to all.
Merry Christmas to you.
Are you doing this right now? I'm to be with you. Nice to meet you.
Okay, we'll move to item number 4, discuss approve Christian Christmas bonus for staff. Open the floor for discussion.
I'd like to see us give $100 to each staff person.
Okay. Other comments?
We could give them a Christmas tree. There's still some left that man didn't sell.
Give you a motion.
Yeah.
I'd like to make a motion that we give a Christmas gift to the staff of $100.
Okay, we have a motion. Is there a second?
I second.
Any further discussion? All in favor? And the motion carries. Daryl, is that something that we can cover under the American Rescue Plan?
I wouldn't think so.
Well, I'm thinking if we worded it, because we had staff that had to work with the camera, had to learn how to use the camera, that type thing. Is that,
I wouldn't think so.
okay. Never hurts to ask.
Do you agree?
Never hurts to ask. That money's got to go somewhere if we're going to be able to use it.
I think we'll just have to partner with Jim more than anything else.
Yeah. At some point, we may want to think about, and this is something we can discuss in our workshop planning first quarter of this year.
We got, what, 3 years to spend that money?
4 years to spend it, but I think you got, I believe it's 3 years that you have to designate where it's got.
I knew there was 3 years there somewhere in it.
I think it's till 2026, I believe, is when it has to be spent. I think it's 2025 that we have to designate where it's going to go. But water may be a partnership with the county. Okay, we'll move to council comments. Tricia, do you have anything?
I'd like to take this opportunity to say a few words about our Holiday Lights contest. It has been growing over the 4 years. And once again, we had 3 judges from outside the town, and they had a good time with their task. This year, they decided to award 3 honorable mentions, and to name those just in alphabetical order. One honorable mention went to Donnie and Victoria Brees. They are located at 1225 Crowell Dairy Road. The second honorable mention went to Brett and Carly Helms on 512 Highway 218 East. The third honorable mention went to John and Heather Rogan at 8120 Unionville Brief Road. And then the overall winner for this year goes to Art and Gay Flo at 123 Highway 218 West.
What did they win?
They won a yard sign. But they all seem, yes.
Okay.
But they all do have a sign for their yard.
Well, we have pictures of that for the, put on the
Yes.
webpage.
Yes. We have pictures.
Okay. Anything else?
I was just thrilled with the Winter Festival until 5:30 when the bottom fell out, but it was a wonderful event from 4 o'clock till 5:30.
Yes, it was. Jerry?
Yeah, I'd just like to reiterate that it's, these last 2 years dealing with COVID, where things have been up and down, and the one thing that Fairview's always come through with, in my past experience and continues now, is the hometown attitude and be able to get out and do what's best for the town and for everybody to enjoy and appreciate and tied in for the reason for the season. So thank you for what you did. And we got a lot of good remarks, and I think everybody looks forward to the next year. So thank you for what you did.
Jerry?
I just want to say thanks to Lisa and her whole crew. They always put it out every year, and it seems like they get better at it every year. And the council and the town and the whole community owes a big thanks to her for what she does every year. I do have one question for you. Was the moisture coming from condensation?
As far as I could tell, there was a lot of mud trapped in there too.
Oh, yeah, tell me about it. I had to mop it twice. The way the weather was that night before, it just flooded the the bathrooms with water. I mean, there's condensation on the walls. You can see it just dripping off the walls. And with that concrete block, it's going to do that. It's done it before. I've been in there before in the mornings when I open up, and it just dripping wet, and you have to mop it just get a dry mop it just to get the water off the floor. But that does happen under certain weather conditions. There's really not a whole lot we can do about that.
Anything else?
I think that's pretty much it for me right now.
Okay. I want to reiterate what everyone said about the Winter Festival. Lisa and her committee did a bang-up job, as they always do. Y'all are to be congratulated. We really appreciate what y'all do. Came off very well. The comments that I got, everybody was smiling, enjoying themselves. I don't know how many people came by and said, thank you for doing this. So it is very much appreciated. We're still working with environmental on the septic field. We've looked on the town property, didn't find anything. We're partnering with the fire department. Ed and I met with the fire chief and 2 environmental people today to try to discuss what the options are. So we're still working on that. And it's probably going to be a while before we get all the details worked out on the environmental. At the end of November, I did meet with the Scouts, the Arrow of Light, and the Webelow Dens, PAC 601, to discuss town government and the functions of town government. They had asked me to come meet with them. That was a lot of fun. The Unionville Parade, I know that I saw one post that was complaining about the entry fee we paid for to enter into the Unionville Parade. There was no entry fee, so that money could not have gone to feed the homeless or anything like that. As you may have seen a post to that effect, but it's a lot of fun though. We had a lot of fun at the parade. That's all I've got, so I'll entertain a motion to adjourn.
I make a motion to adjourn.
I second.
All in favor? Meeting adjourned.